Hey, what's up, everyone? This is Alex with Property Buyer Connect, and today we are going to answer a question or try to answer the question that everyone seems to be asking right now, which is the housing market going to crash in 2021 or 2022? And it seems to be asked all around the country, and there's similar trends happening, but we're just going to talk more specifically about the greater Philadelphia and South Jersey slash Central Jersey area today. So, yeah, before I answer the question, is the housing market going to crash? Let's just talk about what's going on in general in the market, right? So my handy dandy notepad here. So what's going on? So demand is way up. Why is demand way up? Well, back in 2020, or even before 2020, there was a strong housing market due to low interest rates. We've had low interest rates for a while, which means people can buy more house for their money, right? So the past several years, we've had low interest rates and increasing demand for housing. So that trend was going up, right? And then we had COVID-19, the whole situation starting early last year in 2020. And what happened specifically when lockdowns really started to take into effect was people didn't know what to do. They didn't know if they were going to be able to leave their house for a while. People didn't want other people in their house. And it really slowed down the market a lot. And not many homes were for sale at all. So what you have is you have people who still want to buy, and then all of a sudden the market falls off a cliff, right? Now you add that to the fact that during quarantine, people were more cooped up in their house, right? So you have a lot of millennials in apartments who are like, well, I think I can afford a house. Maybe I'll just move into a house, have a little bit more space. Or people who were in the city or in a smaller house and wanted to go to a little further out into the suburbs, or at least to a place where they might have not be attached to people on both sides of their house. So you have people moving up, people moving out. So there's a lot of demand for different sorts of housing. Problem is, we never really caught up from that bottleneck that we had in 2020. So now you have less houses on the market and more demand. So demand is way up. So that means we say in the industry, it's a lack of inventory. Not to mention that landlords didn't really want to sell their homes either. They're sort of holding on to them. There's a lot of refinancing going on, meaning if you had a mortgage payment that's at a certain interest rate, instead of selling, what you could do is you can just kind of get a new interest rate that's lower with the bank, sign a new mortgage, and then you lower your monthly payments. So that's a way to sort of access the equity in your house without selling it, because you'll get some cash out of that, all the equity that you built up over the years. And in some cases, even just in the last 6 months or a year, people are building equity because house prices are going way up. So with that being said, I just wanted to put a couple statistics up here. So here we have a bunch of numbers, and this is a market statistics report. Specifically, this is for New Jersey. This is Camden County, and this is for Philadelphia County, right? So you have the statistic here that I like to look at is days on market, DOM, right? So that means, as you could see, it's the average of the days on market of the listings that close this month. So that means when a house goes up for sale, what's the average time it's on the market before it gets to closing. So a higher number means that houses linger for a longer time on the market before being sold. And you can see this goes back 5 years. And again, this is for Camden County, New Jersey. Back in 2016, you could see 70, 60s, getting into the 50s, up to 80. And now we've seen this trend downward over the past year or so. Now we're at 30 days on market, which indicates a strong seller's market. Same for Philadelphia. Philadelphia is a little more consistent. There's been a lot of demand for housing in general in this city, but even so, you can see 60s, 50s, high 40s, and recently we're getting in more consistently into the 30s. So it's a strong seller's market, as you can see, even from January 2020 to April 2021. You have the median house sold price jumped up $50,000. That's a big jump. You could see it's a bit more gradual, from January 2019 to December 2019, you have about, what is that? That's even 25,000. So it's accelerating rapidly, right? And the thing is, it can't last forever. So at some point, it can't last forever. At some point, the housing is going to get so expensive that people just aren't going to be able to afford it. But you do have people going out of their way, doing all kinds of crazy things to buy houses now. You have people paying cash. You have people paying $30,000 over what the house is appraised for. And what that does is it really creates a problem for people who want housing. But more importantly, it just shows how much demand there really is. The thing, though, is that separates this kind of market from like an 07, 08 is people are qualified. So most people buying houses are very qualified to buy the houses. There's not much of these no-doc loans and lending at 100% of the value of the house that we saw back in the housing market of prior. You have people who are actually qualified, especially, like I said, people my age, around the millennial age, who've been saving up for a while. They might have good paying jobs and they want to plop it down on a house. You also have people who just have straight up cash. That could be, people who, have a bunch of cash saved up from working or whatnot. They could have received a gift from family. It could be companies that are buying houses cash for investment purposes. So there's a lot of pretty qualified buyers that I think are just overpaying a bit for houses. So like I said, it can't go up forever because people will run out of money, and eventually the economics of everything just won't make sense. So what we actually have is we have what I would call a melt up, not a meltdown. So prices are sort of melting up right now. They will come back down to earth. However, that's sort of tied to interest rates and a lot of other factors. But by my estimate, and believe me, I'm no expert economist, but just paying attention to different indicators and different people and the way everything's going, it doesn't seem like there's going to be a crash. So the answer is no, there's not going to be a crash. And even a 5 or 10% decline in housing prices or more does not constitute a crash. Crash means 2007, 2008, complete wipeout, people, like millions of people foreclosing, and just house values plummeting. We're really not going to see that, we don't think, or I don't think. Now you might ask about, there's a lot of people on forbearance and what happens when that runs out and people need to start paying their mortgage. Yeah, you're definitely going to see some people default, but I don't think it's going to be near the scale that we saw a decade or so ago. So I just want to make a quick video about that. I'm checking my notes to see anything else I want to talk about. Oh, yeah. So I just want to talk really quick about. So all the properties I'm talking about are mostly properties that are being renovated or in pretty good shape that are being sold, on the MLS to retail, what we call retail buyers who are looking for sort of just something to move in, maybe make a few repairs here and there, make it to their liking. But there's also a different part of this, which is the investor side. So there's a lot of investors that are looking to, buy properties as well. And what's happening is they're finding a harder time to make anything really work numbers wise. Now you may say, oh, well, I don't feel bad for investors or landlords, but fact of the matter is they're the people that provide, market rate housing. They're people that provide quality housing at a rental number that people can afford to pay. Now, if everything starts going up, it's going to be harder for landlords to pay. So one thing you have is, inaccurate. Can I even spell inaccurate? Inaccurate, housing estimates. So, or pricing estimates, right? So as prices get inflated more than they're supposed to be, you have an issue where people think their house is worth more than it is. So you have now people, investors, a lot of novice investors competing, just trying to give the maximum price to someone whose house maybe not that in good of shape. And the problem is they're going to find out in a year or 6 months when they're done with the house that they're not going to be able to make any money because they spent a lot of money paying for it. The prices of raw materials is skyrocketing. And so they're going to have to bring up rent prices. So it's really important that you work with people who are sort of grounded in their pricing. And sure, I mean, everyone's going to want to get top dollar, but what's going to happen is if everyone expects top dollar all the time, then when the market does slow down, people are going to be in for a rude awakening, thinking that their house price is more than it's worth. So definitely get a few opinions on that before you decide, like, this is absolutely what my house is worth. I'm not taking a dollar less. It really helps to talk to experts in the area to make sure that you're pricing your house appropriately, especially because market conditions are changing quickly. So just wanted to touch on that. Of course, if you have any questions, you can call us anytime. Visit our website, propertybuyerconnect.com, or you can leave, in the case this is on YouTube or Facebook, you can leave comments below and we'll always answer your question. Thank you and take care.